It's actually quite evenly split when we look at our top sector picks. It's between growth and value, but for very different reasons. So within value, we like financials, we like energy, we like materials, much more sort of the cyclical sectors driven by the reflation trade. But there's still a very good argument to be had for technology and communication services. I think the secular trends that have been driving those sectors upwards are still intact. And if anything, they have been very much, the prospects have been improved post-COVID for those sectors. So it's a mix. It's not just, within US, we believe it is the FANGs driving it up. It's much more broad-based. And you can see that the sector performance it's been good across the board for the US year to date.
Absolutely. We saw a bit of a slip up, I guess, in the wording from Janet Yellen last week, that the suggestion that there could be a hike in interest rates in the near term. But when you think about that with regard to the inflationary pressures, what's your take?
So the inflationary pressures definitely exist. I think in the latter half of this year, we're going to see prints above 3% in the US. I think the key thing is really to balance that shorter term inflationary pressures with the longer term view of key central banks around the world, including the Fed. The central banks have struggled to see persistent inflation over the last decade, even prior to the great financial crisis. And the view was post-COVID, it would be a significantly deflationary event. So you can see that they're likely to let the economy run hot. And this is why they essentially need to see the persistent inflation above their targets for an extended period of time before they consider tapering. Overall, the risk of tightening too soon far outweighs the risk of letting the economy run hot in these circumstances.